See, balance sheet, this, when we started, we were such a small base that showing 60% balance sheet growth was no big deal. But we chose to grow at 25, 30 because we wanted quality growth and therefore earnings profile. And the return on assets and the return on risk-weighted assets is really what drove us. Margins drive us a lot, this thing, growth, of course, is there. I mean, if you're growing 25%, you're growing better than industry, twice better than industry. So we didn't, just balance sheet expansion was never such a big driver for us. That means becoming big was not this thing, but becoming profitable was. So if you saw, when we did our first 3-year plan, it was not about scale, and it was not about volumes. It was about profitability, productivity, and efficiency. And that sort of became the measure of success. And those measures of success have played through these 12 years of the thing. So certainly we were margin driven. And margin means after risk adjustment. That was our drive.
Okay, so I'll take the clock back the first 12 years. You started with a low base, you started building a retail franchise. The tailwind was very strong because private banks were lending and PSU banks did not have the capital to lend. That worked in your favor. You created a technology-based platform. But as we wrap out of this, as you migrate to the next decade, you've incubated small businesses, a diamond finance business, vehicle finance business, where you're very large now. You also have a big presence in rural because of Bharat.
Microfinance.
Microfinance business. Core banking was, let's say, 100% of your profit 12 years ago. Now that profit is less than 50%. In next 10 years, will that come down substantially and other verticals will start getting added up?
See, we are still subscale, I would say, in certain businesses. We are fully scaled up, I think, on vehicle financing with our market shares. And the last 2 years have enabled us to get even deeper market shares. In almost every category of vehicle financing, from 2-wheelers to 8-wheelers, we have gained market share. I think putting more scale there is not. So we will grow in the usual, say, in the 20s. We will grow that other thing. Then I think in the diamond financing businesses where we are leaders, also I think it's not a question of building scale. That's really keeping quality going. And the margins are deep. So we are fine with that. Scale should really come into our non-vehicle retail assets. Okay. That's subscale. We've got 9 products in there. All are small. I think there's plenty of room for us to grow. So if you see right now we are making our next 3-year plan. And that 3-year plan, one of the drivers is the retailization of our asset profile. So non-vehicle retail, so whether it's loan against properties or whatever you call loan against shares, credit cards, all those sort of things. Although we will keep our unsecured retail credit capped.
Okay.
Right? So that is where scale has to come in.
Has to kick in.
Yeah. And massive scale has to come into our rural coverage. Right? There I see tremendous potential to grow. So for instance, it's not just monoline microfinance lending that we will do through Bharat. It's so many other things. Right? So if I was to pay a compliment to Bajaj Finance, we want to be the Bajaj Finance of rural India. And we have the capacity and the reach and the coverage, right? Through the Kirana stores and through that. We've got 150,000 villages there. There we are going to bring scale.
We are a $3 trillion economy right now. Somewhere in next 10 years, we will be a $5 trillion economy. IndusInd Bank right now is not in the top 3 in terms of market cap. In next 10 years, do you have a plan or thought or strategy in place that IndusInd Bank could be amongst the top 3 banks in terms of market cap? Are you eyeing that space? Are you that hungry? Are you that, do you have this kind of an aim in your mind?
There's 1, 2, 3, 4, these positions don't matter so much to us. I think what matters is the returns that you are giving. Whether I am number 1 or number 2 or number 3, if I give a 10% return to my shareholder, it's meaningless. But whether I'm number 6 and I give a 50% return, as we did in the past, that means more to us. Our focus is really to give higher returns. Quality of returns, sustained returns is what we don't want, that fluctuation of this thing. And I was looking at a chart today that, our 3-yearly return is to the shareholder actually is among the highest in in the industry even today. That's what we would want.
It's an independent report which has come from Motilal Oswal, which also talks about it.
Yeah.
You think markets have been very harsh here when it comes to understanding the IL&FS problem? You were trading at a price to book of about 4 times for the better part of the decade, in line with what other good, well-run private banks are. Suddenly there is a big divergence. And that's only happened after IL&FS. Even though you've communicated very clearly, why are markets not respecting it?
You see, the IL&FS cast a pretty wide and deep shadow across the whole industry. And if you have a valuation which is 4.5 times book, you have to double tick every box. You understand? Consistently, quarterly, you have to double tick. And in 1 quarter you don't double tick, or 2 quarters you don't double tick, then the market sort of works its way around.
When
I wouldn't call it harsh. You know, this is the way the market is. It was not that they were specially soft on us earlier, right? But our delivery was more consistent. So it's not that suddenly we've been beaten down. You have to double tick that box to keep those valuations. We will strive to get back into that, right? So our thing is not to curse the market or to curse the analyst who would say that thing. The analyst reports we respect. You listen to the analyst. What do you think? Maybe you differ on the perspective, but we don't. You've done your research, you come to this thing. So our thing is to get back to that, the better valuations through consistent return to profitability.
Will you be back on track somewhere in FY21? Or could it be a long road of recovery?
No. See, I mean, if you really take out the that IL&FS, really part of it, you see we are still among the lowest credit costs. In spite of all those names being thrown about, what is the residual amount that they have left in our books? Of course we had them, but they didn't give us pain. They came into our book as a AAA, but they deteriorated into a B- or whatever they or a D, some of the other things. Yes. So I think that our focus is really, one is growth, margins, and then credit cost. Gross net NPA don't matter. What hits your P&L really matters, right? And if you see even last year, if you excluded IL&FS, our credit cost was 53 basis points. It's among the lowest in the industry. And consistently over the last 5-7 years, we've been between 50 and 60 basis points, right? So maybe a little variation will happen here and there. But for a bank like us, to do 60, 70, 80 basis points is still best in class. Our strive is going to be to get to that figure. How the market rewards you is to be seen. But we must deliver consistency and we must deliver on what we say. That's what matters. So our focus is really that. What valuation it gives us, I don't know. Our job is to deliver earnings per share. The market gives you the multiple.
I did not want to use the word key man risk, but you used it. I'll take a leaf from your question. Yeah. Key man risk. Shareholders would say, Romesh Sobti has managed to create magic. What happens after that? I know your answer would be, look, the board is fine and we have systems in place. But let's be, corporate history tells us that when leadership changes, not in a year, not in 2 years, but in 3 to 5 years, the culture and the companies and the banks, they change. How would you defend this question?
See, there's this, I told you about the 5 guys who came in together, that like-mindedness story. Today, I am now calling the top leadership team of the bank to work on our next planning cycle, the next 3 years. You know, I had to count 100 people that I would have to call. That's the bench strength we have created. One of my things, whether it's visible or not, has always been to expand the leadership team and the mentoring of the leadership team. It all happens by demonstration. I would say today that the like-mindedness has moved from those 5 to almost 100 people. I would not like to use the word indoctrination. Okay. But I think the like-mindedness has got, they buy into it. When we did our last planning cycle 4, the 2017-2020, I called 60 people for a workshop on thinking, what are we going to do? What's good for us? What's not good about us? And that's how the plan emerged. They buy into it. That's why I think creating the bench strength has been one of my most satisfying, I would say, features. And therefore, the legacies that you leave down are carried not by the guy who's going to come into the place, but there are 100 other people who are running the businesses. They carry the legacy. So I think that that key man risk we have defrayed across scores of people, right? And one of the features, of course, you saw, one of the features that's never talked about in the market is that in 12 years, not one of the management team members left this bank.
Oh,
Not one.
I didn't realize
Not
that.
one senior
That's great
has
news.
left this bank. And I guarantee you this is how it's going to be. Even 3 years from now. They're as wedded to the businesses. All of them believe that the future is brighter than the past. Nobody is sitting on the last 10 years. Otherwise they say, hello, we did a lot. No, they say the future is better than the past. That's the slogan in the bank. So I think that this handing over the baton, it's a symbolic thing to one person. But that one person doesn't run the institution, I can guarantee you this, right? Of course, by demonstration, you create a sort of culture, if you would say that. And what's the culture we've created? It's a culture of performance, right? It's not any airy-fairy sort of things on culture or on softness. It's culture of performance, but sustainable performance. I think that's what we would leave behind. So I'm quite, and this has happened over the last 2-3 years, I'm quite sort of satisfied that the passing of the baton is an event, is a non-event in that sense, you know. It may be an event for the market. It's not going to be an event for the institution, I can tell you this. Because you will see there's speculation going on, the names and things like that. But continuity is the major, influencer of our decision on succession.
So I'll take the clock forward. Let's assume hypothetically, again it's an hypothetical question, 2030. If you and me were talking about IndusInd Bank and the date was for 7th of Jan 2031, what do you think we could be discussing? Right now we're discussing a bank which has been a comeback story of last 10 years, a bank which has given great shareholder returns, a bank which has been built on core banking, and then you got added services. Next 10 years from now, what would be IndusInd Bank like? How would I define IndusInd Bank?
See, the basics of being a universal bank are not going to change. And of course, if I say that I'll be more digital and less physical and all those sort of things, every bank is going to be that. I think that's not going to be the differentiator. I think if I am around to see 2030, then if I see IndusInd back to that 4 times price to book.
I'm sure that'll happen before that.
I want to see that.
Okay.
Right? Therefore, the continued success of the organization is prime in my mind. And I really I'm not one of those guys saying, oh, well, I did it, when I went away, everything fell apart. That's not the way. That's not the legacy we want to do. So, I would not see IndusInd as the number 1, number 2, number 3 bank. We will never be that size. Because if I am growing at 25% and somebody else grows at 20%, that 20% will be higher than my absolute growth. Right? So it's not a catch-up game. IndusInd is never going to be in the catch-up game. IndusInd is always going to be number 1, number 2, number 3 in terms of return on assets, return on equity, interest margin, cost to income ratio, credit cost, revenue per employee. 6 drivers and RORWA. In these measures, we want to be number 1, number 2, number 3. That's what we want to be thought of as. Not as a number 3 bank. Who cares whether you're number 3 or number 4, right? So this whole thing about, I'm now number 5. So hello, who cares, right? But if you say, I'm number 1 in return on assets or return on equity, people care. That's what I would want to see.
I want to know, what is the secret sauce which keeps you going at 70? What is the day like in your life? With bankers, we have this image, they are boring. They are always talking numbers. But bankers are beyond that, right? You need to understand life in a very holistic manner, world and businesses in a very real manner to start lending. So what is the day in your life?
See, every day begins with, I'm an incorrigible optimist, right? So even if the previous day has been lousy, I think the next day is going to be better. That keeps me going. That really is the story. What keeps you going at 70, I think, is genes. It's probably genes. My father in April will be 99. right? So there, I hope that some of his genes have come down here also as well. But I think really what motivates you is the feeling that more is to come, right? That expectation that more and better is to come.